Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, what we got going on in the stock market is a lot of insider selling. Now, who are insiders, right? They're people like Jeff Bezos selling his Amazon stock, Mark Zuckerberg selling his Meta stock. Warren Buffett, right? He's got out of everything, not everything, but he's holding almost 300 billion in cash. These are signs that something's going to happen. Something eventually will happen. It's called the bear market. Now, I think the Dow, I think the Russell are already in the bear market. We'll find out once they drop 20%. They go, oh yeah, it's a bear market. Started back in November for the Russell, started in December for the Dow, and maybe we can push up the NASDAQ or the S&P up here in January to a new high, but then it will start its bear market after. So November, December, January, and they'll all be in a bear market eventually. And this is really bad, but you got to use some caution here. A lot of the moon boys, you do what you want to do. A lot of moon boys think we're going to hit 100,000 on the Dow. They think the NASDAQ's going to double and triple from here. Maybe they're right. I'm not saying they're wrong. I'm just saying a lot of the smart money is already getting out when billions and billions of dollars are being sold by the insiders. Insider selling right now is 6 shares of stocks sold for every 1 share bought. That's a really extreme level. Insiders are getting out. Insiders are selling, and that's going on right now. So use caution in the stock market. Yes, we're probably going to still have a little bit of rally into the end of January here and try to get the NASDAQ and the S&P up to new record highs. But can they do it? Or will it just be a lower high before they start their bear market? We'll see how that plays out. Now, I want to continue a little bit with the thought on the bond vigilantes. The bond vigilantes, of course, are the ones that are pushing the long end of the bond market, the interest rates higher and higher. You see the bonds are falling. They're crashing in value, and the interest rates go higher. That's how bonds work. As the bonds sell off, the interest rates go higher. Now, the Fed, they control, well, they don't control. They think they control the short end of the curve, but that's where their money, when you hear that the Fed cut a percentage point or cut 50 basis points or whatever, that's the short end money. The long end money, that's being controlled right now by the bond vigilantes, and they cut 1% on the short end, but bond vigilantes are pushing this up higher. Now, why is this a big problem? It's a terrible problem for the United States. It's a terrible problem for the Federal Reserve. And the reason it is because of the banking system. Now, what happened? Okay, well, let's take a look at where interest rates are right now on the long end of the curve. Well, let's just go with the 10-year, right? It's pushing up towards 5%. Towards 5%. If it gets above 5%, that's where the banking system started to break, right? Silicon Valley Bank went down when they pushed it up above 5%. Silicon Valley Bank went down. FDIC came and they bailed everybody out. People that had 250,000 or less, they got bailed out, but the people with 250,000 and above also got bailed out. That's when what happened. Rates went up above 5%. The bank system started to break. FDIC came and bailed everybody out. Now, we had the one in Oklahoma that nobody's talking about, Lindsay, Oklahoma, right? That bank went down there. Now, above 250,000, they didn't get their money back yet, right? Okay, I mean, below 250, they got money back, but above 250, some of that's going to be bailed in. Now, that's really sad. The bail-ins have started and nobody wants to talk about it. But in the banking system, you're going to start to see bail-ins when they start to fail. Now, why are the banks going to fail? Well, you see, the problem is the banks are taking incredible losses right now, just incredible losses. Okay, so the FDIC, they used all their money to pay Silicon Valley Bank people off. They've run out of, they don't have money. But of course, don't get me wrong, government's going to print them more money, and that's going to, well, it's going to push the long end of the curve up. Higher interest rates when the government prints money. So FDIC out of money, government's going to print money and give it to them because they're going to have to bail out the banks. The banks are starting to fall, right? They're starting to, well, we had Silicon Valley Bank, we had Lindsay, Oklahoma, we had First Republic, we had a couple others go under, right? But okay, you're going to to see a big one go down. Now, my guess, I'm just throwing a name out there, but it could be Bank of America. A lot of people say they're in trouble. A lot of chatter about they're getting ready to pull the plug on them. Maybe they are, maybe they're not. I don't have the inside track or anything, but they pull the plug on Bank of America, you're going to see a domino effect. Okay, now when I talk about this, why would they pull the plug? Well, people want to get their money out, right? They're starting to get their money out. If just 5% of the people want their money, Bank of America, they don't have their money. Where'd the money go? Okay, so you went and deposited your money. They took your money. They went and bought bonds. When did they buy them? They bought them when they were 0%. Where are they now? They're going up to 5%. And if they get above 5%, they're going to be in a lot of trouble. Because remember, as the rates go up, the bonds that they already bought these bonds, they're dropping like a rock, down 30, 40% already. And that's your money. That's the money you deposited. They lost 30 or 40% of it there. But that's not the problem. That's not the problem. The problem is you got all these black swans that are circling, right? They're all circling together. You got the bond market dropping the value of the bonds that they've already bought. Those are going down, so they lost that money. But now you got the commercial real estate market. It's estimated that the banks will lose another $1 trillion just in commercial real estate. See, commercial real estate right now, it's a disaster. You got buildings sitting empty everywhere. When they have to sell these in fire sales, they're lucky to get 10 or 20 cents on the dollar. So they loaned, when it was up here at 100% on the dollar, maybe they loaned 80%, right? But they can only get 10 or 20% in the fire sale. So they're going to take this big hit, and it's hundreds of millions. It's billions, hundreds of billions. It might be as much as $1 trillion that they get hit with. And we got almost $2 trillion coming due 2025, $1.5 trillion that have to be refinanced, have to be rolled over. But you see, rates aren't at 0% anymore, and they're creeping up higher and higher. They're at 5% now, but I think they're going to hit 6, 7% before this whole thing plays out. And if you get up to 6 or 7%, these banks, they're going to start to fall over. Now, what else do banks have? Banks loan money to businesses, right? That's what they do, corporations. But they don't loan them. It's not like Apple's out there borrowing the money, right? I mean, Apple's got all the cash they can handle. All the big Magnificent Seven, they're flooded with the cash, right? Who are they loaning the money to? They're loaning the money to the zombie company. Now, what's a zombie company? Zombie company is a company that doesn't bring in enough cash flow to even pay the interest on their debt. Kind of like our government, right? I mean, our government, they can't afford to pay the interest on the debt. Now, the difference is our government, they can print the money, right? Now, me and you, when we get in trouble and we can't pay our bills, well, that's a whole nother section here. When we can't pay our bills, can we go out and print money? No, we can't. We have to default on them. But the government, they don't have to default. They can go print money. But me and you, we default. When we can't pay our credit card bill, we call the bank. Don't call the bank. The bank calls us and we hide out, right? We say we can't pay our bills anymore. And this is what's happening. Banks are losing billions and billions of dollars. And people, they can't pay their credit cards off. They can't pay their car loans. And their cars are upside down anyways. They owe way more on the car than the car's worth. So they just stop paying on it, right? So they stop paying their credit cards, stop paying their car loans. Commercial real estate delinquencies at a record high, 11% aren't paying already. And you're going to get there's so many problems out there with the banks, right? So the banks are losing billions in just consumer defaults, right? They're losing billions, maybe as much as $1 trillion, commercial real estate, right? And corporations, they're not going to be able to roll the money over at the cheap rate, so they're going to default on these poor banks. And these poor banks, they've already lost your money because they purchased bonds when they were at 0%, now they're at 5%, so they've lost 30 to 40% of your money. Now, what you got is a bank like Bank of America, right? They got a large short position in silver, right? It's called a naked short position. Some say it's as much as 1 billion ounces. That means that every dollar that silver goes up, well, the bank loses $1 billion, right? Now, let's say silver goes from $30 to $50. Well, they lost 20 billion. This is just one bank. A lot of banks have short positions on the silver market. Now, the silver market, it's all paper loss. This is paper, right? This is paper. There's not enough silver to bail them out. You see, they play the SLV, right? The SLV, now that's controlled by J.P. Morgan, Jamie Dimon. He's in charge of that one. He just got the GLD also. He's got the SLV, he's got the GLD, and he stores the silver. He says there's silver back in this, says there's gold back in the GLD. I don't know exactly what's going on, but they're making it very consolidated. Now, maybe it's going to be confiscated. Maybe that's why they let Jamie Dimon handle the SLV, handle the GLD. Now, why does he get a handle? Why? Because his traders are already in jail for rigging the silver market. They're in jail. They're sitting in jail. His top traders are still in jail and now, of course, they paid the fine off. They paid, I don't know, $1 billion, whatever, which was chump change for manipulating the silver market. And so let's, why not? Let's put them in charge of the SLV. Why not? They got traders that are manipulating it. So they're in charge of this. But Bank of America, they got 1 billion ounces naked short, right? So let's say silver goes from $30 to $100. Bank of America just lost $70 billion on top of their consumers' delinquency rate skyrocketing right now. On top of the commercial real estate they own, they're losing money hand over fist, and just regular corporate loans that can't get paid back by zombie companies that don't have the money anymore to pay it back. So what's going to happen? You get a little bit of a run, just a little bit of a run. Less than 5% of the people want their money back. B of A drops like a rock. Now, what happens when it drops like a rock? All the banks are kind of intertwined, right? It's really frightening as to what's going on out there, but they're all intertwined. So when one big one goes down, that could bring the whole system crashing down. And I don't want it. A lot of people say, Tall Mike, you just come out here and you just talk all this negative stuff. I don't know if it's negative. I just think it's real. I think, if you don't understand some of this, you might be failing math along the way, right? I mean, a 7th grader, I can teach this to them, they lost 40% of your money in the bond market. People default and delinquency rates are going through the roof. Yeah, the bank's in trouble, right? I can explain what a short position is. In silver, every dollar silver goes up, they lose $1 billion. Just one bank. This bank cannot afford it. This bank is in jeopardy. Now, granted, they might be too big to fail. So what happens? Government steps in. They print the trillions of dollars needed to bail it out. Well, what does that do? Well, that causes the long end of the bond, because you go farther into debt. Remember, if you go farther into debt, they're going to want more interest to loan you money. So that long end of the bond goes 5, 6, 7, 8. All of a sudden, you got mortgages over 10%. You got car loans at 15 to 20%. This whole thing comes to a halt really quick. The problem is in the banking system. They're getting ready to pull the plug. There's a lot of chatter on the internet right now. You can look these up you can Google it. You can go on YouTube and listen to people like me. Now, they don't want this getting out. YouTube does not really show my videos to many people. That's fine. That's fine. Me and you will talk about this, right? But you want to be careful with the banks. Now, I know you got to have some money in there. And I got too much in there, right? But you spread it around a little bit. I think I have 3 different banks that I keep a little here, a little here, a little here. And you kind of spread it out because one of them's probably going to go away. One's going to go under, and then maybe you still got one that works, right? But, the best thing I like is gold and silver, right? And take it out of the system. Take it out of their system. Get in your own system. No counterparty risk. But these banks, they're making me really nervous. Now, a lot of the small ones are going to go down. That's just a fact. The FDIC, they say they got a list of them, right? But they won't tell you and me the list. There's like 80 of them on there, right? Of banks that are going to go under this year. And they don't give that list out because there would be a run on the banks. They're hoping and praying that these can be consolidated. When you hear your bank is merging, well, it's just really a bailout that, don't tell anybody one of those banks is in trouble, right? Well, that's what they do. That's how they do things. See, the FDIC, they don't have the money to bail all these things out, so they kind of want to merge. Now, back in the Great Depression, we lost 9,000 banks. There's good news. We can't lose 9,000 banks now. We only have about 4,000, maybe 4,500 of them, but they want to consolidate these down. They want to get them down to 6 or 7 banks, and then they want to reduce them to just one bank, which was a central bank, and then they want to release that central bank digital currency on you and tell you this is the new thing that's going to save the world. And I'm telling you that Bitcoin, it's kind of getting, it's the Trojan horse. They're trying to get used to the digital, right? So they can bring out their central bank digital currency and take away the rest of the freedoms that you still have. That's their plan. That's their master plan. I know that. You know that. You watch the channel. Don't let them do it. Let's stop them. Let's get together. If you like this stuff, yourself. Give me the thumbs up. Punch that subscribe button. Get out there, everybody. Have a great day, and we'll talk again real soon. Bye-bye now.